Right then, good afternoon on Monday, the 10th of July. As we start another trading week, but we'll have a quick look back to last week before we get stuck into this week. We can see pretty sideways, choppy across the S&P, the Dow, the Nasdaq, and the Russell to start the week last week. Obviously due to Independence Day in the US. So Monday and Tuesday, a bit of a write-off in terms of US stock indexes. But you can see it across in Europe. You can see the DAX obviously starting here on Monday, just a one-way train for the duration of the week. Couple that with the FTSE and the Nikkei, just solid downside across stock indexes over the course of last week. Then the US jump in, and over the course of Wednesday, Thursday, they push their stock indexes lower. Thursday into Friday morning, and a bit of a spike back, and then it comes into NFP, or came into NFP on Friday at a bit of a spike higher off the back of NFP, but then got smashed lower into the close on Friday evening. So a bearish week across stock indexes. Now that did result in some bearishness across the US dollar into the close on Friday, and over the course of last week, US dollar downside is what we saw, which is not something that really goes together. Certainly when you're talking about interest rates being risen or paused, or when that sort of a scenario is in play. Normally you would expect the stock index and the currency to move in opposite directions. So the fact that we did see that into the close yesterday, and certainly over Friday, US dollar weakness, couple that with stock index weakness, bit of a sort of strange one to work out. But we'll try and make sense of that as we head on into the course of this week. But we can see bond yields globally continue to push higher, certainly across the US, Germany, and the UK. Obviously Germany being the European benchmark, and bond yields continue to push higher. On one aspect, they could be pushing higher off the back of expectations for the economy to prove, or to be resilient going forward, and to the economy to improve going forward, which goes in line with the US story of positive economic data, certainly since the beginning of last month, and sort of in general over recent months, adding kind of hopes for a soft landing in the US. Germany and the UK are slightly different. Things are a little bit different in the Eurozone and the UK at the moment, but bond yields continue to push higher off the back of interest rates expected to be higher, or moving higher, the markets had anticipated a number of months ago. So bond yields continue to push higher, continue to put pressure on stock indexes. Currency is not really reacting maybe how they should in relation to that, but sort of bearish dollars, bearish stock indexes is the story of last week. And then into this week, right, we had Chinese CPI this morning lower than anticipated. Is that a slight front runner for US CPI on Wednesday? Obviously remains to be seen once we head around to Wednesday. But you can see then on Tuesday, tomorrow, no high impact data over the course of today's European and US sessions, but into tomorrow we have some consumer confidence figures, some business confidence figures out of Australia, which now the RBA potentially being on a pause, but them being data dependent going forward, this data then becomes ever more so important. So the beat on consensus or positive data means the RBA are likely to keep the foot on the gas, but that certainly does not take center stage over the course of this week. We have some UK unemployment figures out tomorrow. Obviously labor market figures in the UK, it's not really what's important in the UK at the moment. What is important is UK inflation, and we do not have that this week. So those unemployment figures, maybe some short-term price action, you might get some movement off. Obviously, falling unemployment is then likely seen as probably positive for sterling, maybe negative for the FTSE as it continues, or the Bank of England can have more leeway to continue to be hawkish. Rising unemployment, obviously the flip side, but does it really give us any sort of clarity around inflation and the Bank of England going forward? I would say no, it does not. But CPI on Wednesday out of the US. Now you can see the core CPI print, consensus 5%, so expected to be a drop on the previous month's figure of 5.3%. Core CPI month over month 0.3% consensus versus a previous of 0.4. Now this inflation rate, the CPI print, the total, the headline figure, once you include food and energy costs, the core CPI print removes those figures, but the total rate of inflation back down towards 3.1%. That is more in line with what we are expecting to see. But I mean, in terms of central bank, they want it back at a more sustainable 2% inflation rate. But in terms of where that is historical prints, I mean, if you look at a 3.1%, take it back 5 years, like, yeah, okay, 4%, but that's mid 2023. In mid 2022 it was up at 8%. In mid 2021 it was up at 6%. So 6% higher than the previous year. then it's 8% higher than the previous year, and then still 4% higher than the previous year. So in terms of cumulative figures, it's still now near 20% higher from 2020 prices. So it doesn't really fix anything, the fact that we're back towards a more sustainable 2% level. So in terms of in terms of a consumer point of view, a personal point of view, a lot of people don't really understand these figures, but we're still, inflation's massively high, even if we're back to a more sustainable 2%, or back towards a more sustainable 2% figure. So something to keep in mind on in terms of kind of from your personal point of view, but in terms of the trading point of view, the further this comes down, the more positive it is. But these monthly figures, I think these monthly figures are more important, certainly for me on a personal level. Now, we've had a raft of high impact data over the course of the last 6 weeks has been positive out of the US. Now, this is the June CPI print. So with a bunch of positive data releases, does that maybe cause some potential for some upside to inflation? Maybe inflation doesn't continue lower at the pace they think. I think that's certainly an option, or certainly a situation that could unfold into Wednesday. So I think these monthly figures are what I'll be keeping an eye on personally. And of course, CPI print, if we get a beat on these figures, especially go from 0.1 up to 0.3 in terms of the total CPI print, that goes up 0.4, 0.5, that's certainly going to be negative for stock indexes. What that means for the US dollar not really reacting maybe how you would think it would, but those stock indexes, a miss on these prints should spark upside in stock indexes. A beat on these prints should spark downside in stock indexes as well. And I think arguably there's some risks to it being tilted to the upside once you take into consideration the data going forward, or in the past, sorry. And that leads us on to the BOC, the Bank of Canada, fresh interest rate decision. Now there's a 66% chance of an interest rate hike priced into this meeting. 66% is obviously a long way off, the 100%. They don't need me to tell you that. It means a 34% chance of no interest rate hike. Now, we did have weak GDP figures, we did have weak inflation figures from Canada since their last meeting. So if the 66% hike priced in, I think the risks to that are tilted to the downside for the Canadian dollar. Apart from that, we got some GDP figures out of the UK, which is expected to show the contraction that markets have been waiting for. Consensus minus 0.4%. We got further updates on how the UK economy is performing in the midst of these interest rate hikes and the high levels of inflation. Consumer sentiment figures on Friday, that comes after these CPI prints. Probably not the most important, certainly as of now, but we'll update a bit more on Friday once we come around to it. But that is it. That's where we're looking at for the course of the week. Pretty difficult to pinpoint some direction until we get those CPI prints out on Wednesday. When they do come out, we will be sure to update further at that point.